I think everyone already knows what to do to become a great trader. It's constantly talked about and written about everywhere, but I take a different approach to teaching traders. I believe it's essential to talk about what you shouldn't do. This helps eliminate most mistakes and risk right from the start. Moreover, every time you will eliminate at least one wrong thing in trading, you become better and more experienced. Now I'm going to tell you about 6 mistakes that hinder traders from making money, and we will discuss how to avoid them. Ready? Let's go! The first mistake that beginners absolutely love is overtrading. A newbie comes to the market, sees there is a good money to be made, and starts trading non-stop, barely stepping away from the computer, but instead of earning, they end up with many losing trades. Overtrading is a very tricky thing. In a regular job, if you work more hours, you earn more money. In trading, you start losing. There is a simple explanation for this. If you have ever played a video game for several hours straight, know that a trader who monitors charts non-stop is almost no different. They start making the dumbest mistakes, give into the emotions, and fully understand what's happening in the market. The best way to avoid this is to create your own trading schedule. It's like a timetable for work. You can dedicate 1 to 2 hours to trading every weekday, but it's better to have the same hours each day, like from 6 p.m. to 8 p.m. This helps develop trading discipline and prepares you in advance for the trading session. Plus, in 2 hours you won't overtrade and can still make decent profits. And if you don't know how to trade during those 2 hours, I invite you to my Telegram channel. You'll find strategies, trading ideas, and you can trade using signals and get the best educational materials on trading. The second very serious mistake is ignoring risks. Imagine you are skydiving, but this time the instructor didn't go through training and packed your parachute haphazardly. Do you think you land safely? I don't think so. The level of risk in trading can be controlled. Just like in skydiving, you can lose your entire deposit and once or spread it across many trades. You can enter the market with 10 currency pairs at once, or study 2 to 3 pairs, understand how they behave, and earn profits without stress. Risk management is considered one of the most important aspects of trading. Besides properly distributing your deposit, I recommend you also do 2 things. First, always double-check all parameters before making a trade: the amount you are going to invest, the direction of the option, the currency pair's name. There have been cases where traders analyzed one currency pair but entered a trade on another, just confused the buttons. Others managed to invest $500 instead of $50. It's good if such a trade results in a profit, but what if you lose $500 in such a silly way? The second rule is don't trade in altered state. For example, if you're very sick, I don't recommend you sitting at the terminal. Illness distracts you from everything. You think first about how to ease your suffering, not how to properly enter a market position. There are many other rules on this topic, but for a good start, this will suffice. Now I want to show you a couple of trades with explanation, so you can see how to properly enter the market and how I use the risk management in my work. Here I open a buy trade. It seems there is no signal on the chart, but this entry is strictly according to the trading strategy, and I'm confident it will bring me profit. I entered the trade after following the steps in my chart analysis. My strategy here is the engulfing pattern. On the chart, it's located here. The second candle fully engulfs the first, including the body and shadows. I entered from this point because entries after an engulfing pattern should be made when the second candle fully closes. Many use this pattern on its own, but it can be strengthened with levels on the RSI indicator. Risk management is fully observed, and I confidently earn a profit. Notice I entered the market with $180 on a $6,000 deposit. That's just 3% of total amount. Now let's reinforce the risk management rules with the same strategy. Here I have an oversell sell signal, so I immediately open an option. The reason is again an engulfing pattern, but this time it indicates it's the right time to sell. On the chart, it's hidden in the spot. After the second candle closed, I managed to enter at an even better price, since the chart pulled back a bit. Notice the entry was again just 3%. You can use this formula to calculate what risk you are willing to take. Now please like this video, and if you are not subscribed yet, hit the subscribe button so you don't miss the next awesome episodes. The next two mistakes are neglecting analysis and following the crowd. The first one is straightforward. If a trader doesn't research the market, doesn't understand how an asset moves, or prospects of currency pair, they become more of a gambler than a trader. They just press the buy or sell buttons based on gut feelings. For such people, the chance of profit is even lower than 50-50s, like betting on red or black, where the casino slightly rigs the results. Be sure to study technical analysis. Even if you just copy one of my strategies, your trading without knowledge of technical analysis will eventually hit a dead end and become incredibly boring. The internet is full of educational materials, but you don't have to scour different places. Just subscribe to my Telegram channel. Inside, I break down trades, provide various trading strategies, and simply support beginners with conversations. Join us, the link is below the video. Now let's talk about following the crowd. This happens when a trader doesn't have their opinion and just follows others or jumps on some hype. Such people find it very hard to make money in trading. The crowd often makes mistakes and chooses the wrong instruments. That's why I recommend developing your own strategy instead of just copying others. There is nothing wrong with copying per se, but you shouldn't rely on it too much, because sooner or later you could lose a lot of money by following the crowd. Always stick to your own strategy, even if everyone else is going in a completely different direction. Now on to mistake number 5, which I call lack of discipline. Discipline is a strict adherence to certain rules and norms. In trading, you can develop discipline by keeping a trade journal. If you came into trading thinking you can trade whenever you feel like it, you won't become a trader. Make sure to keep a trading journal where you record all the data for each option. This allows you to review trades, analyze your entries, and draw conclusions. Often this helps eliminate many recurring trading mistakes. Now let's see why it's essential to be disciplined while trading. Here I open a trade because I saw a clear signal according to my strategy. How did discipline help me here? The chart shows a downward trend, so my trading plan states that I should only open trades for this line. My strategy also specifies that I should enter when the price touches the moving average from below. Under no circumstances should I enter at any of these other spots. That would be a violation of trading discipline, for which the market will punish me with losses. And here's the option closing in profit, adding a significant boost to my deposit. Here's another trading situation. The price is bouncing between the support and resistance levels. Right now, it's on the bottom at the support level. According to my level strategy, I usually look for another signal divergence. On the chart of this asset, the RSI indicator has formed a divergence, a discrepancy between the indicator's readings and the price chart. This is what it looks like in real trading. The RSI is rising while the price keeps falling. I waited for these two signals according to my strategy and entered when they both indicated the right situation. And here's the profit from this trade. How do you like such simple trading? It's simple not because I use a trading plan and strive to cultivate trading discipline. Be disciplined yourself, make sure to like this video and subscribe to the channel. Now I will tell you about the 6th trading mistake. It might not seem very important, but in reality it plays a crucial role. It's indecisiveness. Imagine you prepared well theoretically and have started trading, but something unpleasant happens. You see an excellent signal, but thoughts swarm in your head, preventing you from taking the trade. As a result, you miss one good signal after another and lose potential profit. If a great market situation arises where you could make a good money, but you are too indecisive and can't stick strictly to your strategy, you won't earn anything. To avoid this, you must trust yourself and your strategy, which you've documented step by step in your trading plan. You can build this trust initially on a demo account and then with real money, but with the smallest stakes. Definitely give it a try. If you struggle with indecisiveness, it will surely help. That's all for today. I need to go prepare the next episode, which you shouldn't miss. Review all the mistakes again and try to gradually eliminate them. This way you'll become stronger and better at trading each time. You can definitely do it. I wish you successful learning, elimination of mistakes, and great mood. Goodbye!